Okay, what is going on, CYPRX YouTubers? Welcome back to the CYPRX YouTube page. As always, if you are interested in learning about cryptocurrencies, commodities, indices, foreign exchange, how to trade them, utilizing technical analysis properly, please go ahead and consider subscribing to the YouTube channel. In today's video breakdown, guys, I hate to say it, but I told you so. Okay, I told you so. Every other YouTube page out there right now is telling you bullish XRP. Bullish XRP. The whole entire month of January was clickbait to everybody, telling you all that XRP was going to rally. I saw $34 XRP videos, $500 XRP videos. XRP is going to rally right now all over YouTube for the month of January. It's not happening. Okay. And since the beginning of January, since I had been releasing live market breakdowns for XRP, I had been mentioning to you all that we most likely were going to see a pullback beneath 70 cents. And guys, look what's coming to fruition today. Again, proving to you all that you guys are dealing with a YouTuber and a trader who actually knows what it is that they're talking about. Now, I have some very interesting articles for you all here today that I'm going to read, some fundamentals and some technicals as well. Some very interesting aspects surrounding what I think is going to happen in the future for the cryptocurrency market in general. I told you guys, in my personal opinion, a couple videos back that I think that we need to see a shakeout beneath some of the early buy positions, beneath the 70-cent area, and then down beneath the 50-cent area. Now, you guys, just paying attention to some technical analysis before we jump into the fundamentals, guys, please, I ask that you make sure that you subscribe to the YouTube channel, okay? It really does help boost the YouTube algorithm if you like the YouTube video as well. But we're trying to grow this YouTube channel here, and I know that a lot of people, right, they just click off the YouTube page without subscribing. Please make sure that you hit that subscribe button. We really do appreciate it here at CYPRX. Now, this, downtrend that I drew for you all at the 70-cent region and what to expect, okay? Let's zoom into price action and actually see, all right? I'll draw a little box tool, okay, around the 70-cent region, just to show you guys, okay, that I know what I'm talking about. Okay, I drew this for you guys and I said, what can we expect once we surpass the 70-cent region? We can expect a test of the 70-cent region, a break of the 70-cent region, a retest, a lower low, and a new lower high before a melt to be created. And look at this, exactly what I drew for you guys. Lower low, retest, lower low, a new lower high, and then a meltdown. Okay, that's exactly what we got in price action. So now that that's updated, we are in the live market right now. We're on the 15-minute chart, 9 minutes resume on this candlestick left to be printed. Okay, in my personal opinion, I do think that we're going to come and we're going to shake out buy positions anywhere beneath 60 to 50 cents. Okay, now that is a drastic pullback, okay, in comparison to where people most likely, let me get rid of all of this jargon now that we're not in this area anymore. Okay, we'll keep that 80-cent mark because that is a significant area that we're going to need to break and hold back above. All right, but we can clear all of this stuff out here and we can update the charts. I will go over how you guys, if you were paying attention to anything that I've been saying on the CYPRX YouTube, instead of flooding in buy positions, I hope and pray that you all were patient enough to wait and listen to me and say, oh, you know, Cypress has been pretty accurate with the majority of his videos on YouTube since day one, okay? If you guys haven't checked those videos out, go back and check them out. But I have been extremely accurate telling you guys where price action is most likely going to go based off of logic and the ideology behind early buyers and sellers in the market, okay? So I hope that nobody bought in these areas. I told you guys to hold strong and be patient and wait for that further discounted pullback. We had drawn a Fibonacci on from this high, from this low to this high. And we had said, okay, if price can hold above the 70-cent region, we could see a retracement back higher, but I highly doubt that that is going to happen. And look what's coming to fruition. Again, I told you guys that those buy positions in the form of these early dip buyers could have been liquidated, and that is exactly what's happening now, all right? So how utilizing the CYPRX strategy before we jump into the fundamentals surrounding why the market dipped and what caused this market dip, in my personal opinion. Again, who really knows what the overall agenda is? We can only read fundamentals that are given to us on a retail trading level, okay? But so same ideologies, okay? When everybody else in the market, guys, is bullish, look to this YouTube page. I don't pop smoke to you all, okay? Yes, the thumbnails are clickbait. Why? Because you're not going to click on the video if it doesn't interest you. But when you actually watch these videos, tell me they're not informative. Tell me they're not informational. Guys, come on now, okay? every other YouTube page out there, and I'm not going to, attack them like I did in my last video, because YouTube algorithm doesn't like that, and a lot of the viewers that stand by those YouTubers don't like that. But everybody's been telling you guys that XRP is bullish. Wake up, you guys. You guys could have caught this nasty sell position right here based off the ideology that I teach to you guys, okay, on the CYPRX YouTube. Now, the CYPRX traders could have capitalized on a massive sell position on XRP had they have been actively trading XRP during this Thursday's New York session, okay? So just based off the ideology that I teach here, we identify what? Early buyers previous to the session start. Well, look at this, New York session, we see early buyers in this area. So we have a reason to believe that if the market does decide to reverse up in this area after it grabs early sell positions, okay, it's most likely going to come and hunt these early buyers. What we also see, okay, the daily candlestick for the day of Thursday opened here. Thursday's Asia session, this is the area where the daily candlestick opened. And we can see early buyers in this area as well in the form of retail support. We can see that the market pretty much consolidated all the way up until London session passed over price action to New York. Okay, now again, we see early buyers, but this entire area is an area of retail support where retail traders are expecting this to be some type of rally. We see the market consolidate, consolidate, rally. Come back to this area, consolidate, consolidate, rally. Where we can imagine retail stop losses were existed all in this area. Okay, so this is a target for us here at CYPRX. Well, look at this, CYPRX strategy, boom, we've identified early buyers pre-New York session. Okay, the market is simply just coming to liquidate early sellers in these areas here and these areas here. Look at this. After we see a liquidation of early sell positions, early buyers left behind, we see a rally, a bullish rally that halts completely at a psychological level. Again, this is XRP against the United States dollar, so we're going to utilize the quarter methodology, the quarter theory, to track our psychological levels. And look at this, 76225. The market has a bullish push up into that area, rejects that area. After a rejection of the psychological level, it fails to create a new high. That is a signal right there. This lower high, in comparison to the previous one that rejected the psychological level, is a signal for us here at CYPRX. If you guys have been paying attention to the YouTube, this is a signal to potentially reverse the market. Why? Because look at this. The market has broken fractal structure. This is a higher low in comparison to the previous one, but this new low has broken the market structure. The current market structure has now been broken. So we've created the definition of a downtrend. We've created a liquidity grab, we've created a break in market structure, and we've created a new market structure lower high. This is now the definition of a downtrend. Okay, we can look to take sell positions in this area, or if you're a little bit nervous and you're not, confident enough to take sells in this area, you can wait for another break of structure and another discounted pullback to enter in at another lower high to catch the moving train to the downside. And look exactly what happens. Another break of structure, another pullback, another break of structure, another pullback, and so on and so forth. And the market reverses. Okay? Guys, if you have not been paying attention to what I've been teaching you all here, which is just basic stuff, okay? Beginner stuff. So if you guys think that what I've been teaching you here on the YouTube channel is advanced, I'm telling you, check out the CYPRX advanced course material. Yes, it's a little bit pricey, but that's because we put hard work into it, okay? Compared to some other trading communities out there and what they're charging, compared to what we give here at CYPRX, over 60 hours of course material, access to a private group chat, access to unlimited one-on-one calls once you finish the course material with either myself or our other mentor, Ezra, okay? I say that the price that we charge for the CYPRX course content is extremely low in comparison to what it should be, okay? So that link is in the description down below for anybody who's interested on catching scalp moves like this. I mean, this was a beautiful intraday scalp right here that you could have caught and held to the next New York session with the ideology that I've been teaching you all, that we could be coming to liquidate buy positions beneath the 70-cent lows here. Okay, and look what the market did. If you were just utilizing the CYPRX methodology and you were able to enter at that lower high after the break of structure, that would have been a nasty risk-reward ratio if your stops were above the previous high of around, if you were just targeting, okay, the 70-cent region, that would have been a risk-reward ratio of 1 to 4. That would have been 4% on your capital. Now, had you have held it, Hypothetically speaking, of course, nobody can know for a fact that they could have held that long. Okay, but that would have been a 1 to 8 risk reward ratio, 8% on your capital. So if you were trading a $100,000 account, okay, let's just say, hypothetically speaking, again, you passed an FTMO or My Forex Fund Challenge, which is what we highly suggest, to our CYPRX advanced students once they are comfortable enough trading our strategy that they do. So let's just say, okay, you passed a $100,000 challenge, all right? You now have access to $100,000 in capital. You make a 1 to 8 risk to reward trade on $100,000 in capital. That's $8,000. Okay. You do a profit split with your prop firm. Right now, My Forex Funding, I'm pretty sure, does an 85% profit split. Okay. You make 85% of $8,000. Okay. So take it upon yourself again. Stop watching those YouTube pages that are telling you every single day XRP is bullish. Get fine-tuned with the market. Understand how to read price action properly. Make sure that you subscribe to the YouTube channel so that way you guys can follow price action. I've given you guys my bearish targets of where I think price action is going to go. We are hovering at around 65 to 66 cents right now. On some exchanges, it hit 65 cents. On some exchanges, it's only suppressed to 66 cents. Okay. Watch the price action of XRP. We are now currently operating inside of this new bearish leg, all right, where we see around the 76 cent high and around the 66 cent low. So we're operating inside of this A to B move. Okay, obviously, of course, if we're going to reverse bullish, we need to see a break of the 76 cent region. We need to see price hold above that, and we need to see price continue with the bullish leg higher. Okay, if we don't get that, we have to assume that the market at any given time could pull back to then create a lower high, to then reverse and dump lower. Be mindful of that, okay? Be mindful of that. You guys know overall, I think that in the long run, we are in a heavily discounted price for XRP compared to where price is going to go into the future, okay? So take it upon yourselves. Again, this isn't investing advice. Think about where you are comfortable enough, to enter into a position where if the market does decide to drop lower, you could expect some volatility and price swings in your overall portfolio. Now, if you're a long-term holder, these prices should not scare you, especially if they do drop further, okay? It's just a matter of your patience and your risk appetite, all right? So going into some reasons why the market had dipped, and then my overall, the best article that I have for you all, I'll keep that to the end. Make sure that you smash the like button if you like that technical analysis breakdown, giving you guys some price targets to pay attention to, okay? Just some interesting articles. This is from You Today, just to catch up on why the market potentially, right? Again, because nobody can realistically know why the market for sure dropped. Who knows what the overall agenda is, but this is what the mainstream is telling us. Okay, so we see here, all right, this article from You Today, 3 reasons for Bitcoin drop below $40,000. Obviously, of course, right now, because of Bitcoin dominance, Bitcoin is controlling the rest of the market movement. Okay, I think that one day that's going to go away. I think that coins like XRP, Casper, XDC, XLM, what's another one, HBAR, are going to be in the top 10 cryptocurrencies and potentially the top 1, 2, 3, 4, 5 spots. Okay. In my personal opinion, I think that they're going to blow Ethereum and Bitcoin out of the water in the near future. Let's just be mindful of that and pay attention to price action and cap it in market capitalization. All right, so reading this article, while USD inflation might act as a Bitcoin promoter, often called an inflation hedge, the government's action against inflation are not playing in favor for the first cryptocurrency. In order to control inflation in the country, the U.S. government is aiming at increasing the key rate and changing the monetary policy that will affect risk-on assets like cryptocurrencies and some stocks. Uncertainty in the markets. As market data, including funding rates, suggests, traders are currently following the general trend. This is interesting to say the least because look at this. Traders are currently following the general trend. The general trend right now, guys, is fear. Okay. So remember, 90% of individuals follow the herd. When they see a downtrend, they follow that trend. Okay, that's just that simplistic. Humans are naturally herd following individuals. All right. So investing more in short orders rather than betting on the reversal. Such sentiment is more likely tied to the rapid increase of the hash rate, potential incoming selling pressure from the increased number of Bitcoin miners. The aforementioned strengthening of monetary policy might also act as a fuel for bearish sentiment on the market. Additional regulations. This one was very interesting. Okay, Russia potentially banning cryptocurrency and things of that nature. While the Russian cryptocurrency market capitalization remains far from the closest competitors, like the US or other parts of the CIS region, the complete prohibition of cryptocurrency usage and mining would still be considered a low blow for the market. All right, that was a very interesting article again from You Today. This was another interesting article that I found for you all. This again was from You Today, okay? And it reads, crypto market capitalization tumbles from 3 to 1.8 trillion in less than 3 months. That is insane volatility. From 3 trillion to 1.8 trillion in less than 3 months. That's insane, okay? Just scrolling down on this article just to surpass time, okay, I have some other articles for you that I want to cover for you all. Bitcoin's path down. The major part of cryptocurrency market capitalization was lost during the first 2 weeks of the year 2022. First, political instability in Kazakhstan has caused a global risk-off on the financial market that affected digital assets. 3 reasons for Bitcoin's drop below $40,000. Later on, the U.S. Federal Reserve teased the strengthening of the country's monetary policy that will include a key rate hike and downsizing of the quantitative easing policy that was reportedly the main catalyst of growth of the stock market. If you guys don't know what these terms are, things like quantitative easing, monetary policy, the Federal Reserve, strengthening of market sentiment, things of that nature, okay, you guys can go, I'm going to show you a website that you guys can go and read some of this stuff on. But to continue the rest of this article, the most recent low blow for Bitcoin and crypto was a total prohibition of the cryptocurrency operations in the Russian Federation. The country's central bank has recommended that cryptocurrency should be illegal for payments and all operations inside of Russia. All right, that was a low blow for the market, obviously, of course, causing fear in the market, causing market uncertainty. Okay, that's going to pull the market down. But think about the overall agenda. Remember, in order for the market to make a new high, it must pull back and it must grab buy positions from anybody who chased the previous market rally. Okay, it must liquidate buy positions to accumulate orders to then reverse and send the market higher. What is happening in the market right now via the bearish sentiment and the fear that's taking place is necessary for future growth in the market. If again, you are a long-term hodler and you know that you are in control of your emotions, this market crash right now should not, entice fear over you, okay? You should know that in the long run, these cryptocurrency markets are going to the moon. It's inevitable, okay? So much money, once big banking institutions and once ISO 222 is released to the general public, and everything is in full swing, there's going to be so much money in cryptocurrencies that a normal every average day individual is not going to be able to just buy any cryptocurrency that has potential for less than $1, less than $2, less than $5. Okay, so giving you guys a website that you guys can go check out. Again, monetary policy, rate hikes, inflation, okay, any U.S. news, things of that nature. You guys can check out this website. This is a website that we use as traders for the forex market, but it has consistent news updates on any adverse news events. Okay, it doesn't really matter if you trade forex or not. You can utilize this for just general news and what's going on with the world. Okay, this is forexfactory.com. How to manipulate it? You guys click this news button right here. Okay, and you have general news. You have the hottest stories. You have fundamental analysis breakdowns. You have news that is currently updated, breaking news, all in this area here. I mean, amazing news articles that you guys can go read and decipher for yourself. You guys have a economic calendar right here that you can click by clicking this calendar tab. Again, just trying to reiterate really quickly, what you guys can go and check out. If you want to read any of these fundamentals that have been released, you click the detail button tab right here. Now I have GBP JPY, fundamentals coming out for myself because I trade GBP JPY in the forex markets, and I also have USD news. Okay, you guys can go to the tab up here and you can edit what country you want. Okay, what currency pair you want to have news out about it. If you're in Australia, you can click Australia. If you're in Canada, you can click CAD. Okay, if you're in let's say China, okay, CNY. If you're in Europe, you can click Euro. Okay, so on and so forth. Okay, so just giving you guys a little bit of a news fundamental backdrop. Again, I know not everybody here that watches this channel trades forex, so this is just a little edge for you guys to go and get on current world news. All right, reading another article. Again, I know that not a lot of people are aware of this, but the Ukraine and Russian tension right now is extremely high and volatile surrounding what it's doing to the markets. Okay, why? Because when there's a war, okay, think about what's going on in the world right now. Think about the extreme fear that's going on in the world. What is happening, right? We see ongoing inflation. Okay, we see Omicron virus, right? We see news surrounding COVID every single day, installing fear into people's hearts, right? We see political uncertainty. We see countries at the brink of war. And what do I mean by that? If you're not hip to this, okay, Ukraine tension. President Zelensky hits back at Biden comments. This is just another article. This is on BBC.com. You guys can go read about the political tension between Ukraine and Russia and the United States right now. Ukraine and Russia are on the brink of war. Russia is potentially, from what I've been reading, most likely going to invade Ukraine. Okay, or at least they're thinking about it. They're questioning it. I'm not too entirely sure what is going on with that. I'm not reading up too much about it, but just covering this article right here, we read, Mr. Biden had suggested that a minor attack might bring a weaker response from the U.S. and its allies. But Mr. Zelensky, sorry if I butchered that, there are no minor incursions, just that there are no minor casualties and little grief from the loss of loved ones. Russia has some 100,000 troops near the border, but denies planning an invasion. President Vladimir Putin has made a series of demands to the West, insisting Ukraine should never be allowed to join NATO and that the defense alliance abandons military activity in Eastern Europe. Tensions over the Ukraine. Is Russia preparing to invade Ukraine? Ukraine's weight as Russia faces off with the West. Again, this is all political uncertainty and instability in the global economy and, countries on the brink of war. On Wednesday, President Biden told a news conference that Mr. Putin would pay a serious and dear price for invading Ukraine, but also indicated that it might depend on how Russia went about it. What you're going to see is that Russia will be held accountable if it invades, and it depends on what it does. He said, it is one thing if it's a minor incursion, and then we end up having to fight about what to do and not to do, etc. His comments prompted questions for how the U.S. might respond to Russian aggression, and officials have been rushing to clarify Washington Post. We have been very clear throughout. U.S. Secretary of the State Antony Blinken said on Thursday, adding that any Russian incursion into Ukraine will be met with a swift, severe, and united response from the U.S. and its allies. Okay, this is again, political uncertainty, war, things of that nature. This causes fear in people's minds. Why? Because, the ideology behind the United States going to war with Russia is insane. That's insane. Okay, so let's just keep an eye on this one. Again, the crypto fear and greed index surrounding what's going on in the market right now. Again, paying attention to inflation, the Omicron virus, any updates on that, political uncertainty surrounding President Biden's position. We have Boris Johnson, who might be relieved of his position over in the United Kingdom. I've gone over that in some previous YouTube videos. We have countries on the brink of war. All right, there's just so much fear being installed in the general herd's mindset right now. As you guys can see right now, the extreme fear and greed index right now is at 19 over 100. Okay, so this to give you guys kind of a reversal mindset. I know that I just pretty much covered all the negative aspects of things in the market right now, but what are the positives? Okay, again, long term, I've told you guys that this pullback is necessary for further growth in the cryptocurrency market, liquidating early buy positions, people who have over leveraged, on trading exchanges, who aren't trading on exchanges that allow you to just hold long term, people who are opening brokerage accounts for cryptocurrency like FTX, you have Osprey FX, FX.com, crypto.com, things of that nature where you can trade leverage positions. Okay, those people who are over leveraging positions are the ones getting taken out. Okay, long-term hodlers who are exchanging on exchanges or who are trading cryptocurrencies on exchanges are able to hold these positions a lot longer. Okay, and those individuals that are trading on exchanges are getting liquidated from the market right now. Those buy positions and sell positions, again, because the market is consolidating. It's continuously rallying and then reversing and making new bearish legs and things of that nature. All right. So reading this article from the Daily Hodl, I thought that this one was interesting. This is going to wrap this video up. Make sure that you smash that like button and consider subscribing to the YouTube channel. Again, we really do appreciate it, and it does help boost the YouTube algorithm. And we are doing a $100 Casper giveaway, which is going to give you a significant amount of Casper tokens right now, because Casper is, I believe, anywhere between 8 and 9 cents at the moment. Okay, so it's going to give you more Casper tokens, and that is once we reach 2,000 YouTube subscribers. All right, so to read this article and finish off this video, crypto market needs a final flush before bearish trend can reverse, says digital asset analyst Nicholas Merton. Now, I don't know who this individual is, but this was a very interesting article to say the least, which is in cahoots with my overall ideology that I teach to you guys, that this is a necessary pullback for the market to create in order for it to reverse and go to new all-time highs. For crypto assets like XRP, HBAR, Casper, things of that nature, ones that we're interested in here on this YouTube channel. All right. So popular crypto analyst Nicholas Martin says that the crypto market is going through a long-term consolidation, but the position of top traders indicates that there will be a reversal at the end of a final flush. In a new strategy session, Martin tells his 496,000 YouTube subscribers that the top traders are generally bullish and that the price of crypto assets will eventually go up once fear subsides. According to the Crypto Fear and Greed Index, market sentiment went from fear in December to extreme fear this month, which could spell trouble for over-leveraged traders. Again, look at the vocabulary. Over-leveraged traders, traders that are trading on exchanges and not, traders that are trading on FX exchanges with leveraged positions instead of, just regular crypto exchanges like Coinbase and Uphold and, Kraken and things of that nature. Okay. So even though the bearish sentiment is still present in the market, it's very clear at most of the leading indicators that we need to see the final flush. We need people to be at a position where they're either getting liquidated out of their positions or they're flipping the coin. They're down in their excessively leveraged long positions. The trader says that deep-pocketed investors will take advantage of the bear market to ramp up their holdings, while traders who take short positions may face a liquidation of their assets. So anybody that's chasing this bear market right now, in the long run, is going to be liquidated from their sell positions, is what he's attempting to say. As everyone's piling into their shorts, as the short positions build up on the spot market, whales who like to buy real physical Bitcoin are going to buy heavy. They're going to drive the price higher and cause even more pain liquidations for the emotional traders. That's how it works. Greener pastures rallies and prices are usually found in the fear from emotional traders and investors. In the market, the emotional traders fuel the kind of price action that institutions like to buy. Okay, again, remember, the general public is in fear. Herd following individuals are selling their crypto assets right now. People that are scared, okay? At the same time, people are chasing the market and entering in sell positions, right? The market's going to reverse. Guarantee you by midsummer, okay? This is going to be hovering in the yellow and green era where it's going to say extreme greed instead of extreme fear. And all of the sell positions from people who caught sells from when we were in extreme fear, January 21st, mark my words, okay? They're all their positions are going to get liquidated. So again, I've given you guys some bearish targets to surround yourselves with XRP. We need to break back above the 76-cent region to see any bullish continuation on XRP. If we do get that, okay, I firmly believe that XRP could come and surpass our 80-cent target, which if we do get a break above 80 cents and hold above that, we're going to rally most likely back into $1. If we don't get a break above the 76-cent region and confirmational bullish close above, we are going to rally back down below 60 to 50 cents. As you guys can see, I have an alarm set for myself at 60 cents, where anywhere below 60 cents is a good purchasing area for me because that was the last place that I did purchase some XRP coins at. So that would be at a discounted price for me to purchase, again, if I am going to load up on my position. So I have an alarm set for that, as you guys can see here. Blessings to you guys all. I hope that this video breakdown helped you all out. Everybody have an amazing weekend. As always, stay vigilant, be cognizant of your surroundings, and I will talk to you guys later in the next YouTube video breakdown.